us now to take the conversation forward. Deepak, uh, are you fond of cricket? I mean, who wouldn't in India? Which team are you gunning for?
Yeah, good afternoon. Of course, India.
Yeah, I mean, I was just discussing with some of my colleagues earlier in the day, Deepak, that uh, the Indian team is like a stock right now, which is in great form. So the technicals, it's kind of having a breakout of its own on very good volumes. The fundamentals are very good, and the expectations were low. It's like ownership was low, so the probability of outperformance is very high from India this time. Would you agree?
Sure. Uh, but we also have Australia, which is a proven team in the past to sort of fight with. And let's hope that we do well in the crunch matches.
You're right. I mean that sectors can give India a very good competition for flows and admiration, if I may call it. But let's shift focus from cricket to markets as a whole. What is your sense on the market right now? I mean the common narrative has been that global macros are difficult right now, and Indian markets are vulnerable to a fall. We haven't fallen as much as rest of the world, but it is not obliging with a very decent fall. Every time market goes for Nifty, for example, goes towards 19,200, buying comes back. Do you think this would be the nature of the market, resilient because of flows, or it is time to indeed be cautious?
Yeah, so it is more got to do with two or three things. One is that the liquidity infusion post the COVID pandemic is still sort of floating around the world looking for returns across the globe. Now, within countries or within economies, I think India stands out as a good market where one could expect decent returns over the medium term. So by default, India is attracting flows. Of course, last month was an aberration. We saw outflows, and so net, I think there is a buy on the dips kind of a scenario across the globe. We haven't seen back-to-back negative triggers coming at the global level or at the local level. So one or two minor negative triggers are sort of absorbed within a couple of days. But if we have two large negative triggers coming back to back on a global level, then probably the risk appetite of the foreign investors may shrink and their pace of selling could increase. But I don't know whether that will happen and when that will happen. So till that time, I think buy on dips and maybe take your part of your profits on rises could be a good strategy to follow.
Deepak, what are those areas of the market which you really like in terms of structural stories, good quality earnings, etc., where you would definitely be looking at raising exposure if the market indeed falls 5 to 10% in the next few months?
See, typically, I think historically, banks and auto are high beta sectors as far as Indian markets are concerned. Of course, now we have a lot of new listings coming up. So we'll have to sort of look at those sectors also. But I think PSU as a theme will continue to do well. Government will perforce have to sort of restructure their operations with a view to offload their stake from time to time. As it is, the PSUs were available at a very cheap valuation some time back, giving good dividend yields. Of course, now they have moved up. Even now, I think some sectors within the PSU theme are still attractively valued. So PSU as a theme is one of the top buys at this point of time. Apart from that, I think realty, specific realty stocks, or for that matter, power also looks interesting. A lot of other sectors are close to their near-term tops. So in that sense, you may have your trading upside of 3 to 7%. So in case you are happy with that, then maybe you can also look at BFSI. You can also look at say IT also looks good on a SIP buying basis. And capital goods, of course, is also looking good. Although the valuations are not very cheap.
In power, when you say, I want to understand which part of the power space is most attractive on valuation. Is it the generating companies? Is it transmission? Or is it wire cables? Or the renewables, the inoxes or Suzlon of the world, which would interest you?
So a lot will depend on your risk appetite. In case you have a low risk appetite, then probably the transmission and distribution sector will be the best suited for you. In case you are a medium risk investor, then probably the generating companies, the traditional generating companies will look good to you. In case you wish to take higher risk, then probably the renewables, the solar, the wind, etc. Those can be looked at.
What are your thoughts on the two biggest heavyweights in the index, which are not moving now? HDFC Bank and even Reliance Industries. There appears to be a kind of a D rating which is on in both these names. Or would you say that this is a time to accumulate these two names?
So HDFC Bank, I will not be able to comment
I
because that is a
understand.
parent company. Reliance, of course, has deep value. Now, the value unlocking will happen at intervals. It will not happen on a continuous basis. We have seen the demerger of Geo Financials, and post that, I think the stock price has come back to the pre-demerger levels. So, a lot of people see a lot of value in the stock. Some people look at it as a holding company where the different businesses will be spun off and listed separately over the next 3-4 years. So in that sense, the unlocking opportunities will keep coming. But whether you should be buyers now, I'm not so sure.
Also, I want to understand your thoughts on real estate, because there is no doubt about the fact that mid to premium by part of the real estate volumes are doing phenomenally well. And if Macrotech or Sobha, Q2 updates are anything to go by. But a lot of people are choosing not to play real estate directly, but via cement, building material, home improvement, or even housing finance. What would appear more suitable to you?
I think again here, the affordable space so far has not performed very well because a lot of unorganized or smaller players are currently into them. The larger players are yet to get into that space meaningfully. Uh, so the demand remains good. The inventory levels are also under control. Uh, the affordability has also improved over time. In that sense, the medium-term visibility for the realty companies continues to be good. Uh, whether you should play it indirectly is, I think, each one's choice, whether you want to have a direct play or an indirect play. Now, if you want to play indirectly, then you have to sort of take into account the competitive scenario in the whatever space you are looking at, whether it is cement, building materials, etc., etc. And those industries have their own cycles. So, for example, cement has not done well over the last one odd year. Now it has started to sort of come up. So there may not be a clear correlation in terms of timing between realty stocks and their underlyings. So you will have to take your choices whether you want to have a direct play or an indirect play.
All right, Deepak, we'll let you go on that one. Thank you so much for joining us on
My
the
pleasure.
newsroom today. Time for a short break. Once we return, we'll